Hey guys, we're live. I'm gonna introduce you guys, but I also want to give some people a little bit of time to jump on. So we can actually have you up. Let me. So at the top, I can see if anybody's on yet. Majority of the people were added into the Facebook group. We are just getting in. I'm gonna see if anybody come in. If anybody don't pop in, I'll just get started and then they'll be able to look at the replay coming soon, but I'll just give it 1 minute. Okay, that's perfect. So I see a couple of people popped on. Hey guys, thank you for joining us. My name is Ida Robinson, the real estate maven with Samson's Property and a part of Team Flo D. I created this event today to be able to educate all of those who are in the pipeline of potentially purchasing a home at some point. And I welcome you guys for joining us today. You can be anywhere, but you chose to be with us, so we really appreciate it. I'm going to take this time now to introduce the other panelists that's a part of the group. We have Ms. Kiana Rand. She's a credit specialist. She will be joining us today, talking a little bit about credit, talking a little bit about personal finances, and different things that we need to know when it's time to purchase your home. We also have Michael Carolina on with us. He's the branch manager with Residential Funding, Team Carolina. We welcome Mr. Carolina. He's a lender as well. He's going to talk about the lender piece of home ownership. So we welcome you guys aboard. And so I guess we can get started. Kiana is going to start us off first. She's just going to dive right in with a little. Okay. Let me let you guys know. I'm sorry. So we also had India Hall. She's the personal finance person that was supposed to meet with us today. Unfortunately, she has a family emergency, so she's not going to be able to join us this evening. So we'll try to tap into a few personal finance things, but India will get in the group with us at a later date and be able to give you guys all of the nuggets, anything that you need to know in reference to personal financing. So Kiana, I introduced you guys, but tell us a little bit about yourself before you get started.
Okay. Hey, everyone. Good evening. Good evening. Like Ida said, thank you guys for joining us this evening. My name is Kiana Rand, and I am a credit specialist. I have been in this industry for maybe like 2 years now. And the reason why I started with this industry is because when I was looking to purchase a home, I thought I had to wait 7 to 10 years for my credit to get cleaned up, because when I turned 18, I went out and bought got credit cards and things like that. So I just maxed them out and my credit was just jacked up. So every year I would just go and pull my credit report and say, okay, I got 5 more years left. Okay, I got 4 more years left. And so when I found out that that is not the truth, I didn't have to wait that long to purchase a home. I was just like, I have to provide this information to everyone. We shouldn't just be sitting there watching our credit report and just looking at it and not knowing that it's something out here for us that we can get these items removed off our credit report. So that is actually the reason why I came into this industry and things like that. So I'm gonna just jump into a little bit of the personal financing with you guys. When you guys are first looking to purchase a home, you definitely want to pull your credit report to see what it is that is on your credit report. Like I said, you want to see what's on there, see if it's any negative items, any items that do not belong to you, and things like that. So the credit bureaus the 3 credit bureaus are Experian, Equifax, and TransUnion. Now you're able to get a free credit report. I'm hearing that. You're able to get a free annual credit report every year from the 3 credit bureaus. Now you want to do this every year so you can see these items that are on there. And once you Okay, I'm sorry. Once you see these items that are on there, you will definitely want to make sure that they belong to you. Now, you're able to get your score as well. You want to know what your score is because the lenders look at a FICO score. However, you'll get an actual different score from the 3 credit bureaus. So you want to see what that score is so you can know, okay, that you're ready to go out there and talk to a lender and things like that. Now, your credit report will actually show you all of the relationship that you have, where if you went out to go purchase a car, if you paid anything late, if you paid anything on time, that's what your credit report will show you from all 3 credit bureaus. And I'm sorry, I just wanted to take notes so I don't get off of subject. Now, some people, some people don't have a credit report. So some people say if you pull your credit report and you don't have a score. Now, some people don't understand that you cannot have a score because say if you had a credit card and they didn't report to one of the credit bureaus, and people don't realize that everyone do not report to the same credit bureaus. You can have if you have a car note, they can just report to TransUnion and not to Equifax. So what I usually tell my clients is you want to research and find someone who is reporting to that credit bureau that you don't have a score with, and go ahead and get a credit card and use it on a monthly basis. Say for gas, use it on a monthly basis for gas, and you want to make sure that you're paying it on time. You never want to pay it late. You never want to pay interest. And the reason why, you're going to need that money for your down payment, right? So don't do that. So use what you have. So if you only have $50 to spend for that month, you get your gas for $50 and then don't use it until the next month. And you do this on a consistent basis and things like that. Now, speaking about your credit cards, if you get a credit limit for $1,000, you will only want to use 30% of that. So say if you go over the 30%, that's just like maxing out the card, and it will it will lower your credit score. So if you have $1,000 credit limit, you only need to use 300 of that that card for that month, and then you can do it again the next month. But remember, do not pay any late fees, so pay it on time. And also do not pay the minimum payment. You want to make sure that you're using this card and you're able to make that payment the next month, the full payment. Now, let's talk about how your score is actually calculated. Some people don't know how their score is calculated, so they use it any kind of way. So 35% is payment history. So like I said, you want to pay it on time, and you want to make sure that you're just paying everything on time. So your history. So if you make one late payment, that will bring your score down tremendously. Why? Because it's 35% of your score. And 30% is the debt. Now, how much you use, and I got into that already. You want to only use 30% of the credit limit on the card. The next one is 15% of the length of their history. So some people get a credit card like I did. I got a credit card to get new tires from NTB. And I used the card, got my new tires. What did I do? Close it. Because I'm just like, I'm not about to get no new tires no time soon. I just needed it for what I needed it for. I didn't have the money at the time. I closed it. And you want to have your credit limit. You want to have, the longer your credit limit, the older your credit, the credit card is, the better. Because they want to see that you can make these payments to these people on a timely basis, that you have that relationship with them. So when it's time to borrow for someone else, okay, they're able to pay people back on time. So that's 15% of the history. So you want to have keep your credit cards open. Just don't use them. If you don't have self-control, which some people don't, just put them in your closet, put them away, but do not close these credit cards, ladies and gentlemen. Now 10% is the type of credit. So you want to have different type of credits. You want to have student loans. You want to have an auto loan. You want to have a credit card, and that will help your score. because that's 10%. Now the other 10% is new credit. So you want to go out here to get some type of credit. You don't just want to just keep on using cash and things like that. That's not going to help you when it's time to purchase a house. They need to see that they're able to lend money to you. So I would say every year, maybe reach out, try to get 1 or 2 items for your credit. And then now, if you try to do 3 and 4 throughout the year, no, you don't want to do that. You don't want to have so much on your credit report in 1 year. You want to take steps on doing that. So 1 or 2 things every year. And then let's see. Now, that's kind of all I have with the personal financing, and then we'll get into I'll come back and get into the credit restoration part of it. Ida, are you there?
Yes. Okay. Yes, I'm here. We did have a question for you while you were going live. We have a question in the chat. It says, will the credit apps provide the same information as the yearly credit report?
With the credit apps?
Meaning, I think they're talking about probably like Credit Karma, all of the different websites that have credit. Do you know if they'll reflect the same information as your annual credit report?
Now, I would say honestly, for Credit Karma, they're actually not accurate. I have heard that it can be 10 points over or 10 points under. I would say because the annual credit report.com uses Experian, Equifax, and TransUnion, your score directly comes from them, then that will be more legit and
Okay.
truthworthy than Credit Karma and all these other companies.
Okay, so one of the things I want to add, I know with Credit Karma, the information that's on there should be accurate. As far as the scores, that may be something different. The
Correct.
information, for the most part, the information that is listed on Credit Karma should be the same as your annual credit report. But like Kiana said, when you do your annual credit report, you get reports from all three bureaus, versus when you do Credit Karma, I believe it's just Equifax and TransUnion, and all creditors do not report to the same credit bureau. So you may have a credit card with your credit union and they only use Equifax as a person that they report their credit information to. So that if you have a derogatory mark from your credit card, from your credit report, it might reflect negatively on your Equifax account. However, it might not show up on your TransUnion because all companies don't report to all three credit bureaus. So that's something important to talk about. I mean, to know. But thank you, Kiana. So one of the things I wanted to create this group for, because it's about roadmap to home ownership. I notice a lot of my clients that I work with, they don't always know the steps to home ownership. They think that they have to wait, like Kiana said, 10 years, 5 years down the line before they can actually take action. Or they look at these different apps and these different websites and say, okay, I need to pay this down. I need to do this. I need to do that. But in all actuality, the first thing that you should be doing is actually talking to a lender, believe it or not, because when you talk to a lender, you will know your options. You will know exactly where you are in a home buyership. I'm sorry, in a home ownership when it comes to lending. For an example, when you're purchasing a car, your FICO score is looked at differently versus when you purchase in a house. So the things that you may feel like you have to pay off, you might actually don't have to pay those off, because and the lender will be able to let you know exactly where you are, what you need to do, to get to that point. So that's just a little bit, and I just wanted to take a quick break because our awesome event planner let us know that it's time to do um Oh, okay. No, I thought we was about to do some giveaways. So just to let you guys know, we're going to do some awesome giveaways today too. So that's one of the things. So just to talk a little bit about personal financing, because I know our personal finance coach is not here, but I do want you guys to know if you are looking to purchase a house, it is time to like buckle down and start saving some money, because no matter how many programs are out there, you're still going to need some type of liquid cash, rather it's from your retirement account, your saving, your savings account or something. You're going to need some type of liquid cash to be able to purchase your home. We have everybody's situation is completely different. We have some different programs for everyone. So everybody is different. So there are things that we can do to make sure that you can come out of pocket with as least as possible, but you have to be on point with making sure you have something, because there's some upfront fees and things that needs to be paid when you are purchasing a house. So another thing, look into budgeting. Make sure you create a budget after you, and I really recommend that you talk to a lender before you do all of that, because when you talk to the lender and you do that application process, he know exactly what's going on with you. He know what programs you could potentially be eligible for. He know what credit score you need to get to that point. He know what your finances look like. He know what you need to make sure you have in a bank. I mean, it's a number, he or she, it's a number of things that they can do to lead you in the right direction. So it's not always, you shouldn't wait exactly until you're ready to talk to a lender. Sometimes it makes sense to talk to a lender up front just to find out exactly where you are. Now, will that be a hard inquiry on your credit? Yes, it will be a hard inquiry on your credit. But like Kiana said, when you think about it, hard inquiries only is 10% of your credit score. And they really negatively impact you if you're just getting multiple inquiries. Then that's when you're seeing drastic changes come to your credit report. But if you just decide to get a credit inquiry just to see exactly where you are when it comes to purchasing a home, that should not affect you that much. Okay. So do anybody have any questions before I keep going in reference to any personal finance and anything that Kiana talked about? We want to make sure that you guys stay engaged. This is not an event, although I know we're virtual. This is my first time hosting an actual virtual event. So, of course, I was a little nervous because I'm used to hosting live events, but I want you guys to know that this is something that you guys can engage in. Ask some questions. If you have any questions, ask some questions. If anything pop up, I mean anything, we're here to let you guys know. Let me see if, because I also have notes. So if you see me looking down, that's because I have notes. So like Kiana said as well, you want to make sure that your credit, you want to maintain a good credit status. Just knowing where you are always puts you in a better place. Knowing where you are can help you lead to the best loan, the best interest rate. Of course, you could get a loan with a 580 credit score, but the higher your credit score, the better that your loan is going to be, the better your interest rate is going to be. So, that's always important. So before I hop back to Kiana, because we were supposed to go right back into credit after this, I think I'm gonna tap into Mike a little bit, because I want Mike to go into the loan process so we can learn more about that process, and he could talk a little bit more about the scores, the interest rates, and all of that stuff. And then Kiana can go into how she will be able to help you guys if you feel like you fall in a category that you need some assistance with your credit. She'll be able to talk a little more about that. But before I do that, we're going to do a giveaway. So our event planner is behind the scenes. Thank you so much, Melissa. I'm shouting her out. I don't know how we're going to do this, but as she get that stuff together, I'll just let Mike just pop in and just introduce himself and give you a little bit of information about himself, and then we'll do a giveaway, and then we'll just hop right into his message.
All right, thank you, Ida, Kiana, great work. First, I want to say to all, it's been a trying time with COVID-19. This is a different platform. As Ida said, normally you used to going live, but this is kind of where we're at right now. So hopefully everyone is safe and well and taking precautionary measures to be safe. That's first and foremost. So my name is Mike Carolina. I've been in the mortgage business over 21 years. We are a direct lender. We offer different multiple products and programs to accommodate different individuals and situations. So not only am I a branch manager, I'm also a loan officer or AKA mortgage consultant. So the question is what is my role in the home buying process? And part of that is to assess your credit, analyze your financial situation, to determine, your monthly payment that you're comfortable with. A lot of times people ask me, well, how much am I qualified for? You may be qualified for $1 million loan, but you don't want to make $1 million payment. So I'll revert that question back to my clients as to what is the maximum payment you want to pay? What is a comfortable payment for you? Is what we're going to base the loan amount or the sales price on. Not only that, we have to make sure, of course, that you qualify for that particular sales price or loan amount. So we prepare you and guide you, of course, through the search for your dream home that you can afford. We'll show you mortgage options and discuss the pros and cons of each option. And then, of course, we'll be your point of contact to personalize your loan process. There's different factors and components for you to get pre-qualified. As Kiana mentioned, the credit is very important. It's not the only factor that we use to get you qualified. It's the credit, it's the income, it's the asset. So me as your mortgage lender, typically the best way of me explain is that we have to do some investigation. I'm your investigator. Don't look at me as a mortgage loan officer, but more so the investigator. I got to be able to solve the mystery. I got to be able to put the pieces together. In order for me to do that, I have to understand where you're coming from. That comes from the credit, income, and assets. And that's how we pretty much analyze whether or not you're pre-approved for a loan. So Kiana touched on some great points in terms of credit. I'll kind of channel in on that. You want to make sure your credit is in position to get you qualified. That kind of opens the door. That's just a starting point. So we as a lender, we actually go as low as a 500 credit score, 580 to get you to max financing, which is referred to as a FHA loan, where we'll finance 96.5% financing, which means you put down 3.5. But as Ida said, that we want to try to get you the best mortgage payment, interest rate, your closing costs. All that's going to be contingent on you as the borrower. There's no magic to this. It's just about what you are able to qualify for and what we're able to do. So I wanted to kind of go into the home buying process. What are the components of getting going or striving towards home ownership? There's a home buying process that we factor in. Typically, you start, of course, getting pre-approved, not pre-qualified. There's a difference between pre-qualified, pre-approved. Pre-approved is more of a way of making certain that you can move forward as opposed to a pre-qualified. Pre-qualified basis, just taking information, maybe talking to you just to see if, there's a chance that you may be able to get into the home versus actually looking at your documentation, such as pulling your credit, looking at your income, collecting your W-2s, tax returns, pay stubs, and getting your assets to make sure that not only information that you're providing, we're also looking at the documentation in order to stamp that pre-approval. So buying a home is pretty much an easy process. It's, I would say it's much easier than actually buying a car. It's just that, typically once you get pre-approved and we issue the pre-approval letter, typically once you get a ratified contract, That 30 days allows the buyer and the seller to make preparation of transitioning from one home to the other. So let's start with credit. As Kiana, kind of revert back to what Kiana was saying, you want to make sure that your credit is intact. That means that, you're just not looking at credit score. You're also looking at the credit history. You're looking at the trade lines. When I mean trade lines, that's pretty much, we also look at which, sometimes it's not mentioned by the loan officer. You have to have a certain number of trade lines. That's such as automobile payments. You might have a mortgage history as well. You have some credit cards. You got to be able to show that you're worthy. And the best way, yes.
Can I interrupt you for 1 second?
Yeah.
Because we have a few questions, and I just want to make sure that they get answered before we go really deep into it.
Okay.
One question is, if you are married and one spouse doesn't qualify for the first-time home buyer program and the other one does, how can the couple go about that when purchasing a second home? Do they have to apply for the mortgage without the other, or in order to qualify for all of these first-time home buyer programs?
That's a good question. We'd have to analyze. It kind of goes back to what I was saying. We have to know your story. We have to get all your information collectively to analyze out of fairness what you're able to do. So if we take an application and both of you on a loan, and let's say for whatever reason, maybe that co-borrower may not qualify, that has an impact and effect on the loan overall. So maybe we have to take that co-borrower off and see if we can use just solely the borrower to see if their income and their credit may qualify a loan. If not, then, there's several options that we can explore, such as a non-occupant co borrower. Maybe that borrower can't qualify because of the credit score. Maybe it's because of the income. It's different factors. We can look at other options where we have a non-occupant co borrower that can help you qualify for the loan. And non-occupant co borrower is what it is. It's basically that the non-occupant co borrower is not going to have the intent of being in the home as a primary residence. They're pretty much just helping you qualify for the loan, but take in mind that that non-occupant co borrower will have the same measures as being qualified in terms of credit and income.
Okay. So really quick, because I know that your company has a lot of different programs that you can qualify. Most people that's looking for the first-time home buyer programs, they're looking for options to have to put down less money, probably out of pocket, and different things like that. So I know your agency have different programs that can qualify you for down payment assistance. Do you have to be first-time home buyers to qualify for some of those programs?
No, we have a in-house product. This is not a state or federal agency that some people or some lenders offer, where you have to get it pre-approved from the lender, and then you have to get pre-approved or qualified for the grant program or the down payment assistance program. What we do is all in-house. When we qualify you, if there's money that you need, we can certainly give you money to accommodate towards your down payment and your closing costs, whether you're a first-time home buyer or not. So that's a benefit. We pretty much will provide anywhere from 2% to 6% of the sales price that can go towards your down payment closing costs, again, whether you're a first-time home buyer or not. So just kind of using some hypothetical numbers. Let's say if you're buying a house and the sales price is $200,000, 2% of 200,000 is 4,000, 6% of 200,000 is 12,000. So we can give you anywhere between 4,000, 6,000 that can be used not only towards your closing costs, but your down payment as well. There's certain criteria to that, and I'll kind of simplify it. I give you the Cliff Note version. You would have to have at least a minimum of a 640 credit score. You would also have your debt to income ratio can't be more than 50%, and you would have to partake in a home buyer's online counseling course, which is anywhere from free to $25. Those are the only qualifications.
And when you're a married couple, they use both incomes, right? They use both credit scores, both incomes, and it's all taking into account to the factor of the middle score of both parties, correct?
That's correct. So when we look at your credit score, and if there's more than one bar, we'll take what all lenders do. They'll look at the middle of the three credit scores. So they'll look at the middle of the lowest credit score. So if you as a bar have a 640 credit score, middle credit score, and the co-bar has a middle score of 620, we're going to underwrite off the 620 credit score. So as Kiana's saying is that, we want to try to put you in the best position as possible when we evaluate and we pull your credit and we look at your income and assets. We also look at ways to build your credit score. We want to get you the lowest interest rate, the lowest monthly payment, but that's going to be pretty much based on what you can do as the borrower. And also just keep in mind, a lot of times, I get calls and clients will say, well, Credit Karma says this or Capital One says this. Those are credit simulators. Those are not your actual credit scores. So just keep that in mind. When we pull credit, we're actually pulling from those three credit bureaus, which is Experian, TransUnion, and Equifax, and we go solely off that. So sometimes when you look at Credit Karma and all these other credit simulators, I'm not saying that score is not correct. They're just simulating the what ifs. So once we pull our credit, we go solely off of that. But there are ways that we can increase your credit score. That just depends on looking at, what type of credit you have. In order for us to do that, we have to analyze your credit. I can't hear you. It looks like you may be asking a question. Hello?
I can hear you.
Okay, I can hear now. I'm getting feedback.
Ida, we can't hear you.
Okay.
Ida?
Mike, can you see the questions on the side? Melissa would like us to answer some more of the questions. Okay, I'll ask, did we ask, let's see. One of the questions were, what range does your credit score have to be in order to get the lowest interest rate on your home? Was that question already asked to you, Michael?
No, but let me break that down real quick. And I'm just going to put it out there. A lot of times people want to know, they see a lot of rates being posted, from online, or maybe what a loan officer is quoting them or lenders quoting them. We're going to be very transparent and keep it real. So, we're a common sense lender. So, you may have a rate, you may see a rate that's at 3.5% on a 30-year fixed rate. Doesn't necessarily mean that applies to you or anyone else. It's just based on your own individual situation. If someone has an 800 credit score, they may be able to get that rate. So the best way of saying, if you got excellent credit, you're going to get an excellent rate. You got good credit, you're going to get a good rate. If you got bad credit, well, your rate may not be favorable. So we have to we have to look into that. So, I want to tell everyone to just be cautious of that. And that's when I go back to saying, it's all about what you provide, what you're able to do. It's not, and credit is just not based, the interest rate is just not based on the credit score itself. There's other factors that determine what your rate will be. If you're going to buy a owner occupied, you're going to buy that property as a primary residence versus investment. He buys an investment, you're not going to get that same rate because it's more risk. So they have to factor that in to your rate. If your credit score is not strong, then you're not going to get that favorable rate. It also depends on how much money you're going to put down. If you're going to put down 3.5%, the minimum, versus someone putting down 20%, that's a big difference in terms of what rate you may get versus what someone else gets. So we get that all the time, and sometimes it becomes challenging, but that's part of, what we do is we're just not your lender. We're here to educate you as well and help you understand that. I mean, we want to try to get you the lowest rate we can, but it's all about what you have to offer as well. So, I want to make sure that everyone understands that.
Okay, someone asked the question. Can you guys hear me before I continue talking?
Yeah, I can hear you.
Okay, great. Someone asked the question, is there a certain criteria for first-time home buyer programs?
So, it depends on where that question is coming from. I hear that all the time. When you say first time home buyers program, identify exactly what that is. When you're a first time home buyer, there are some benefits to that. For instance, you may get a discount, or you may not have to pay the state transfer taxes. That can save you some money. But like I said, in terms of residential home funding, what we have to offer, whether you're a first time home buyer or not, we got grant money. Of course, grants means that you don't have to pay that back. There are some stipulations to that. As long as you maintain that house for 210 days, typically 7 months, the money that you're getting as a grant, whether it's 2 or 6%, you don't have to pay that back. So, it depends on what you're looking for, what your needs are. Some people may not have enough money for down payment and closing costs. So they're going to need that program. And maybe the rate's a little higher than if you had your own money to put down. So the question is, what can you do? I mean, if you can put more money down, then possibly, you can get that lower rate. But, again, it just depends on what your situation is.
So I just want to add on to that a little bit. Do y'all hear that echo?
No, you're
Okay, great.
fine.
Okay. So, to answer the question a little bit further too, because I know a lot of lenders have in-house programs that they have to offer that could assist you with grant money and that could assist you with down payment assistance. But we also know that there's those state programs that they have out there that those are most of the programs that you.
Okay. So, Michael, I'm gonna ask you another question until she gets back. Someone asks, each program have different guidelines. A few income and credit requirements. I don't see how that's a question. I don't understand that one. So I'll go to the next one. What percentage does your debt to income ratio have to be qualified for a home loan?
Okay. That depends on the different program. Each program, and these are great questions. Each program has different qualifications. And let me just touch on the different programs so everyone understands. There's the FHA, which is a government loan. It's insured. The minimum requirement is 3.5%. We'll finance 96.5%. They have their own individual debt to income ratios. Typically, we residential home funding will go up to 56%, which is pretty high, but it'll get you the loan. Conventional, they're more stringent. They require a higher credit score, and the debt to income ratio is less. Typically, they want to see a debt to income ratio of about 42% on the back end. And then you have other programs such as VA loans, where you can get 100% financing. You can only qualify for those, of course, if you are a active or retired vet. If you're not, then you don't qualify for that program. Then they have another government loan, which is what a lot of people are not aware of, is the USDA loan. That's the United States Department of Agricultural loan. You can get 100% financing on that. First, before you can qualify for a USDA loan, it's not so much the individual that can qualify as the property itself. So the property has to be in a rural area. If it's in a rural area, then you may perhaps qualify for a USDA loan based on your credit score requirements. Typically, based on where we are with COVID-19, because a lot of these programs do change at times, you want to at least have a 640 credit score. Then there's an area median income that will also qualify you, that you have to qualify for that particular program. One way of you checking if you're in a rural, of course, if you're in a city, that's not a USDA loan. So if you're somewhere out past the suburbs, that property may qualify for a USDA loan where you can get 100% financing. A good way of knowing that is if you have a particular property that's in mind, you want to put in the zip code and it'll tell you, you go to USDA.com or gov, I'm sorry, and you'll put in that specific zip code, then it'll tell you if it's in a rural area. If it's in a rural area, then you can qualify, or that will put you in a position to get qualified for a USDA loan. Does that answer? Hopefully that answers the question.
Yes, it looks like it answered the question.
I am, but I'm having some issues. I really appreciate you guys holding it down while I go through all of these technical issues on the back end. I think I see a lot of questions here, but I don't know exactly what you guys answered while I was gone. I know the last time I checked, we were talking about the home buyer programs. And it sounded like you were answering that further when it came to the state programs. Also, someone wanted to know further about the non-occupant co-buyer. You can actually have a non-occupant co-buyer.
For FHA loan, they allow non-occupant co-borrower, whether and actually that's another option that you may have. Yeah, I can hear you. The non-occupant borrower, that's someone who can live in that particular state or county, or they can live in a different state. They can, maybe the borrower is looking in Maryland to purchase a home as a primary residence, and maybe they need some additional income to qualify for the loan. So maybe, let's say, Aunt Mary, who lives in California, she may be receptive of getting on the loan with her niece. And even though she's living in California as a non-occupant, that doesn't matter because we recognize her as a non-occupant co-borrower. We can use her to qualify for the loan. Now, a non-occupant co-borrower still has to qualify as well as a borrower in terms of credit, income, and assets. So we have to look at all that to determine whether or not they qualify. Kiana, I'm not sure what's...
Yeah, Ida, we can't hear you. So I'm going to go to the next question.
Okay, that's good.
Is it a seller's or buyer's market now due to COVID-19?
It was a buyer's market for a long period of time. Now it's turned into a seller's market because the houses out here are limited. So typically, FHA will allow, so you all know, I think this is important. Um, FHA allows anywhere up to 6% seller concession, seller help. I'll use the same number, the $200,000 sales price. The seller actually can give you 6% towards seller, what we call seller concession or seller help. So 6% of 200,000 is 12,000 that they're able to give you. On the average, I've seen with application and contracts coming between our office, typically sellers will offer 3%. But now that the homes there's limited on homes because it's a strong, even during COVID-19, which is amazing. A lot of people out here still trying to buy houses. So you got to take in consideration a lot of people are offering and bidding against each other. So you want to make the strongest bid. I mean, obviously, the seller and the seller's agent are going to take the stronger bid. So sometimes now there's offers being made where sellers, they don't need that additional seller's concession, where they may say we don't need any closing help. So that may someone who doesn't have enough money where they rely on some money or some assistance from the seller, that may not get them the offer, as opposed to someone who may say, well, we don't need 3% or 6%. We have our own money to bring to the table. They may, in fact, get the contract. So it's definitely right now at this time, it's a seller's market. So, just be, a lot of people want to buy a house, which is great. Home ownership is what we try to promote, not just for yourself. You're buying a home, it's an investment. You're buying a home not just for you, but perhaps for your next generation. It's certainly more advantageous to own as opposed to rent. You rent, you don't own that home. You can build equity into the home. That's money where maybe you bought the home at 200,000. 3 years from now, that home is now worth 300,000. Well, you got $100,000 worth of equity in that property. You can take that out and use that freely as you want. Maybe you want to use it to go on vacation, or you want to pay some debt off, or you just want to take some money out and rehab a home, modernize your home and do some rehab work. That's cash money that is right in your house that you have control of, that you can take, as opposed to rent. You're just throwing money away. So if you're paying rent and your rent is $1,000 a month, in 12 months, you're paying $12,000. In 10 years, you've been renting that house. You done paid $120,000 that you don't even own. That's $120,000 that you done contributed to paying off that renter's mortgage. So we definitely promote home ownership. But again, everyone, and this is very important, I should say this, you never know unless you try. If there's a credit issue, if there's income issue, you don't know that unless you actually, try to get yourself in position. If there's some credit situation, don't run away from it, address it. We can help you with that. Because there's a lot of benefits to buying a home. There's some tax advantages that you can get from owning a home, from some write-offs on taxes, interest, and so forth. So there's a lot of benefits to owning a home. And again, like I said, you can pass it on to the next generation.
I'm scared to talk. So. Can you guys hear me now? I actually changed whole computers. I hope y'all can hear me a little better.
No, we can hear you fine.
Okay, good. What are the challenges that most lenders, and even though I know each company is different, what are the challenges with COVID-19? Are you guys experiencing any challenges with the buyers being able to qualify for loans?
The challenges are going to be the same as if it was pre-COVID or even during this time. It's just a matter, you know, if you're in a position where you want to buy, that's great. Let's see how we can help you. A lot of times, and I'll be honest with you, we want to be able to close every loan. Every loan doesn't get closed. I'll tell you that. It's just about you have to make sure you prepare yourself for home ownership. Wanting is one thing. Being prepared to buy a home is another. You just got to make sure that you're in position to do your job in order for us to do our job.
So what are some of the things? What are some of the things that could affect someone from being able to for their loan to close? I mean, I'm glad you talked about that because a lot of individuals they feel once they get that pre-approval that everything is good. Once that contract is ratified, everything is good. What are the what do you tell your clients that they should and should not do that could affect their loan in the long run?
I love that question. And I'm just going to say it out to the ones who are on line getting benefit of this webinar, and those who may happen to see this. You have to make sure you have to make sure that you are prepared to be in position to be a homeowner, and you have to do your due. I stress this, and I may sound repetitive, but you got to make sure you have your things or your house in order to get a house. The credit, as Kiana said, you start with that. Make sure your credit is intact. Don't hide anything, because we will find out. It's different type of systems out here. If you got a bankruptcy, you got a foreclosure, or you have a payment plan with the RS, we're going to find out, whether you hide it or not. So just be honest. And, even if those things have occurred, maybe that's a way around it. There's different regulations or options you have. If you had a bankruptcy, for instance, and it's been discharged over 2 years, we don't look at that. As long as it's been discharged, it still puts you in a position to get approved. Don't be honest and straight, whether it's me or any loan officer. Just be honest. Don't try to hide anything, because again, we will find out. Don't put on the application that you make $5,000, and then when we get your pay stub, it shows you make $4,000. That can throw you out. So that's the difference between, again, when I go back to pre-qualification and pre-approval, we're going to look at we want your information as well as your documentation. So, because once we issue that pre-approval letter, we expect to close that loan. Now, there's some things that may factor into why we can't close that loan. Sometimes it doesn't have to do with you as a borrower. For instance, if the house itself, maybe you've been pre-approved based on the income, credit, and assets, but let's say, for instance, that you got a ratified contract, you order the home inspection. Maybe there's some issues with the home with the property itself. When we order the appraisal, maybe they sell the house at $200,000. Now the house is, when we do the appraisal, the house is worth $150,000. So the seller may have tried to sell the house $50,000 more than what it's worth. We're not going to finance a house less than what it's actually worth. So it doesn't have necessarily to do with you as a borrower. It has to do with the property. Maybe when they do title, maybe there's some liens against the property that has nothing to do with you as a borrower. It's just the property itself. We're not going to finance a loan that if they have $100,000 worth of tax liens against the property, we're not going to finance that loan. So our job as a lender is to make sure you as the borrower that you are sound, and we've done our due diligence to make sure that you're pre-approved to move forward.
Okay, so I just want you guys not to get scared because everything Mike is saying sounds a little scary. No, I'm joking. But and that's what a lot of people, that's why a lot of people shy away from home ownership, because they're actually scared of the process. Because this is one of the biggest purchases that you'll probably purchase in your life. So that's why it's always good to have the right people in your corner. Rather it's a personal finance, a credit specialist, a lender, a realtor. It's really good to have the right people in your corner that's going to lead you in the right direction. And although Mike was saying hiding, I don't necessarily think most people hide certain things. They're just not knowledgeable of certain things. So they think, okay, you ran my credit. I'm assuming that you know everything about me. You know everything that's going on in my file. But if Kiana might can help me, but I know a few years ago they passed it where certain things don't even come up on your credit anymore. Judgments, some tax liens, some sometimes even bankruptcy. Some things, some public records don't show up on your credit report. So if you're not open and honest about it on your application or when you're actually speaking to your lender, those are the things that could come back to bite. It's not necessarily being dishonest. It's just being very upfront, because like Mike said, they're going to dig deep into your whole financial background, and not only just the lender, including the title company. So that's when it really gets real, when a title company start to really pull out those different tax liens. You can have, even if you owe taxes and have a payment plan, those are the things that you need to be able to disclose, because those are the things that could potentially affect you from moving forward. So it's like, if we know everything up front, we could tackle everything up front, and that way you guys can have a smooth transition. I always tell my clients, and I try to be very involved with the lending process as well, although all of your private information is your private information, and whatever you discuss on the financial side stays with the lender. But just due to my experience and dealing with different clients, and I know situations that came up, I make sure I ask all of the right questions. I make sure that everything is moving as smoothly as possible, because not only do you want your transaction to go smooth, I want it to go smooth, because when you're happy, I'm happy, and that's my goal, is to make you happy.
Let me interject on that, Ida, and that is great points that you made. We're not here to scare you. We're just here to warn you and prepare you. We try to be very transparent and tell you exactly what it is, so you don't waste your time, and we don't give you an expectation that we can't accommodate. So in order for us to help you, you're going to have to help us. And it's just a matter of just being real. Just tell us what it is, whether we can get you in the house today. If it doesn't happen today, doesn't necessarily mean we can't get you in the house tomorrow.
Okay, so I see that Sharnetta is the first winner of one of the giveaways today. So Sharnetta, if you actually put your Cash App down in the comments, we're gonna Cash App you lunch from one of us. You'll get a Cash App for lunch. So I'm not sure how you won, because I was all missing incognito, but however, I'm just really glad that you're here, and you're the first winner of one of the giveaways. So just drop your Cash App. Somebody asked, how do we connect with Mike to get pre-approved? So I think Melissa added
All my information. Go ahead, Ida. I'm sure they'll provide all my information. Um, make it real quick. You can always call me on my, and I'll put this out here. My cell number is 202-412-0772. My email address is mcarolina, Carolina is spelled just like the state, at rhfunding.com. But I'm sure we'll reach back and provide you with all our contact information so we can help you on the financing side, the credit side, the real estate side, and the personal finance. We all have something to offer and provide a service that could help you. So I appreciate everyone for attending this. I think this was great, and I appreciate your time. Any further questions that you all have, you can feel free to contact me anytime. We do have a staff on board, it's just not myself. I have other staff members on board, colleagues who are equally qualified to help you with your loan scenario.
Take it away, Mike. So I know. Okay, Kiana, I want to go back to you. I want to pop back into you really quick because I know, credit is one of the biggest things that people are kind of afraid of too when it comes. They don't want to look at their credit reports. They're afraid to know what's what. I always encourage everyone to open all your mail, answer all your calls because when you know better, you do better. And the biggest thing about it is a lot of these creditors, they want to get paid. You know what I'm saying? So
Mhm.
if you could create some type of system or something, they'll work with you. If you're experiencing some hardships, they'll work with you. So I just want to make sure that you guys know that it's important to just face whatever you have to face and get it done. I also, on the same breath, wanted to let you guys know, don't think that you have to pay everything to get started. Because sometimes when you pay those old credits or for those collections and all of that stuff, it wakes up your credit. It wake that whole negative mark up on your credit. So just as you thinking, okay, I made this payment and it should be gone. My credit score should raise when all actuality, sometimes your credit score will drop because it woke it up. It kind of made it more active. It made, it brought it to the top of top of the market. So now they're paying more close attention to it. So they kind of woke it up. But I'll let Kiana might talk a little bit about that. I'm gonna let her go into a spiel more about credit and how she will be able to help you if you guys have any credit issues.
Right. Thank you, Ida. So correct. You are absolutely correct with that, Ida. So say if you do pull your credit report and you see those late payments and things like that, you don't have a great credit score. What I do when my clients, they reach out to me about credit repair and credit restoration, what I do is do a detailed analysis on your credit report. So I know that you may have pulled your own credit report and things like that throughout the year. However, we have to have our own credit report and look at all the negative items because we do a detailed credit report, a detailed analysis of your credit report. Sorry. And it actually will give you it's a hard pull because it's very detailed. And what we do, we draft up dispute letters for you guys, and we're going to have all the negative items on your credit report. Once we do that, we do this every 60 days. So we can make sure that we're helping you with removing those negative items off your credit report. So like I said at the beginning, I didn't know that you didn't have to wait 7 to 10 years for these items to go off. And the reason why you don't have to wait because of the Fair Credit Reporting Act that came out, where you can dispute any negative, erroneous items that are on your credit report, even if you are a junior or a senior and somehow your parent information gets on your credit report. You can dispute those items on a 60-day basis. However, and some people do it online. However, when you do it online, you can't do it as frequently as you do it with paper. And that's where we come in and we actually send out dispute letters every 60 days for you. Now, my clients start to see results within 45 to 90 days because of this, because we are doing a detailed analysis of your credit report. We're not just doing 1 or 2 items at a time because we want you to get your buying power back sooner than later. So you can go ahead out there and get your mortgage, a car, or anything like that you're trying to get as soon as possible. Now, once you we're restoring your credit and things like that, you would definitely want to rebuild your credit. So how you can rebuild your credit with your credit cards, paying them on time, paying them, not paying the interest rate, not paying the late fees. And also I offer a system for my clients, which is called Credit My Rent. And what that does is it puts positive remarks on your credit report. Once you pay your rent on time every month, and it can be within the same month. It doesn't have to be before the 5th and things like that. As long as you pay it within the same month, we can report that as a positive inquiry. And that will also help increase your credit score and things like that. Because once you move the negative items off, you would also need to have some positive items on your credit board. The lenders want to see these positive items, that you are able to pay things on time, and you can be with a landlord. You just don't have to rent a property, be in property management, apartment, and things like that. You can rent a townhouse, and your landlord can fill out this paper, and we'll send it off to the two credit bureaus, Experian and TransUnion, to boost up your score that way as well, since we remove those negative items off your credit report. Now, and another thing that we also offer my clients is a secure credit card. Now, some people, for some odd reason, people are getting denied for secure credit cards, which I don't understand. It's your money, but you're still getting denied for it. So we're able to approve you for a secure credit card where you're able to put money on a card, but you'll still be reporting it as a credit card, but it'll be your actual money. And you will pay this on time, on a monthly basis. You still have to only use 30% of the amount that you put on this card, and you want to use it like an actual credit card. And that will help you rebuild your score as well. Now, like what Ida said, when your items go to collections, that's not your debt. You didn't owe that debt to the collection agency. You owed it to Best Buy. You owed it to Verizon. They have already got paid from the collection agency. So when you go out and make payments to the collection agency, then you can you can pay them, but then they'll just say paid as agreed. And that negative collection still stays on there unless you ask them to remove it off. And sometimes they don't even remove it off. So that's why we're able to assist you with getting those negative items off your credit report and things like that. And that's about it. Now, my client, like I said, I think I said already, my clients start to see results within 45 to 90 days. But we definitely want to keep you on. It's a program, and we definitely want to keep you on this program for about 4 to 6 months to get that decent credit score that you're looking for, so you won't have to pay that interest rate, the higher interest rate for someone. And it's best to get the interest rate for good credit and not just fair credit or bad credit. And like Mike said, you can get approved, but why would you want to spend more money on interest and not on the actual purchase of your home? So that's right there. Yeah. So back to you, Ida.
No, you're good. Although we're gonna put the information down in a feed, just let them know how they can get in contact with you, because I seen that Shanetta said that she needs to contact you as soon as possible. So that means she loved the resources and the services that you guys provide, and she feel that you will be able to help her. So how can they get in contact with you?
Yes, you can get in contact with me by my cell number is 240-392-1577. And my email address is kianaran@gmail.com. And then my IG, you can also follow me on IG, ranenterprises.com. Well, Ran Enterprises, not .com. Sorry, Ran Enterprises on my IG.
Okay. All right. That's cool.
I'll be ready to look forward to helping you.
Okay, that's
so
great.
Ida, can I interject real quick? Because bouncing off of what Kiana's saying, that's just great information. Just so people understand, in the United States where we are, credit is very imperative. That's pretty much how we get financing. We don't, other countries, they deal with cash. Here we deal with credit. So credit is very crucial that, in terms of whether you want to buy a house, car, or anything. So the best way of looking at this, is why credit? Well, that's what we use to get financing. Not everyone has the cash to buy a house or a car or what have you. So just take a look at, and this is one of the best scenarios I can give you. It's almost like if you're going to school, they don't know whether you're an A student or an F student. So you got to in order for them to find out, you got to take tests, you got to take quizzes in order and do homework in order for them to measure whether you're an A student or F student. So when it comes to credit, you got to utilize that credit. If you pay back the credit that you're borrowing and you're paying it on time, then you're a creditor. If you borrow the money and you don't pay it back, you're late, then you're going to get an F, and that's how they grade you. So it's very imperative that you utilize this credit. If you're going to apply for credit, that you're going to use it, that's going to be advantageous to you. As Kiana said, get the secure credit. If you're not able to get credit on your own, use your own money. That will help. We look at secure credit cards all the time. We just look at how you're going to pay that credit back. So secure credit cards is one way of helping you increase your credit stability and getting your scores up.
Okay, that's good. So one of the things I want to share with you guys is the purpose of the event is roadmap to home ownership, because some individuals know that they're ready now and some feel like they need steps to get there. My recommendation, the first thing that I recommend you guys to do is definitely get your household in order. And when I say your household, meaning your finances, your documents, because that's another thing. When you're going through this process, there's going to be multiple documents that's going to be required. Mike will be able to let you guys know that. So I'll let him come back in and let you guys know exactly what documents are required. And just think of what you want. And my job as a real estate agent, and I'm also going to drop a link for you guys to fill out a buyer consultation sheet. And what that do is it let me know exactly where you are and what you need for the process. It's on a excuse me, that just threw me off a little bit, but it's on a page for you guys if you want to go and be able to actually fill out the form. But it allows me to see where you are, and once I get a complete copy of that, we can schedule a consultation, and I'll see if you need help with your credit, if you need to be able to go directly to a lender. If you need, I'll be able to assess the situation and see exactly where you are. If I have some clients that say, I'm ready to move. It asks you, when are you ready to move? I have some clients that say that they're ready to move within 3 months. Some say 6 to 9 months. Some say 9 months to a year. So that lets us know exactly how much time we have with you, how much time that we have to get you in order, so we can make sure that you get the best loan possible, the best services possible, and the whole 9 yards. I'm really excited about this whole platform. I'm glad. I'm thankful to have Mike. I know a lot of the questions are always for the lenders, because that is the biggest piece of the puzzle. But that is the most important piece of the puzzle. I also encourage my clients to get a pre-approval first before we start doing anything. I can talk to you, go through the intake form, see exactly what's going on so we can map out a plan. But before we start going to look at any houses or anything, it's best to know where you are, know what your financial status is, know what you're eligible for, know what you're approved for, so we can know exactly what we're looking for. Because like you can make over $100,000 a year and think that you can be qualified for a $600,000 house. However, like what we discussed earlier, when we factor in debt to income ratio and all of those different factors, that stuff plays a big part. I don't know if any of you guys are business owners, but that is a whole different ball game when it comes to getting funding. It's different documents that needs to be put up. It may be additional down payments that's required. So it's a number of things. So when we sit down and be able to talk to you, we can put you in the right direction. We can let you know exactly what you need. If you want to factor in that side business, okay, let's see what you have going on. How long have you been doing this? Have you been keeping records? Do you have this? So there's a number of things that we can, being able to sit with you in the beginning, we can lead you in the right direction. So I am so excited. This went well. I appreciate everyone. Oh, hold up. We got another giveaway. So our next winner is Michael Ford. Am I pronouncing that, or is it Michael? I'm not sure. You were the first person to join the group. So, okay, it's a she. So I'm sorry, guys. So we have this little system on the side that we're trying to read everything. So I apologize. But if you drop your Cash App down in the group, you're going to get lunch on us as well. So we really appreciate you guys coming. But do you have any questions? Like this, now is the time, although I wish we could just open up the mics and let you guys dive in. At some point, I also want you to know that this group is not over for today. I put you guys in this group so we can stay connected, so we can make sure that any needs that you have when it comes to home ownership is addressed. Maybe once a week, myself and other professionals might just pop in a group and do some live trainings where I'll create a whole group. I think they have a chat room now that we can actually everyone can chat together and ask questions and just prepare you to see where you are. And that's why it's called roadmap, because you might not be ready now, but your situation is different than everybody else's situation. You might not be ready today, but you'll be surprised. I'm going to just share a quick little story about myself. When I first contacted my lender for my property, I was contacting my lender to find out exactly where I was in the process. And guess what he told me? You ready now. And in 45 days, I was in my house. You get what I'm saying? And I had no clue. And let me tell you how I was able to do that. There's so many different resources out there that you guys don't tap into. And sometimes you know you can tap into it, but you're afraid to tap into it. I tapped into my TSP, which is my thrift savings plan, which is my retirement plan. Some people have 401ks, some people have 403bs, but I tapped into it because guess what? It's sitting there. It's my money. When I invest that money into that TSP and that retirement plan, I'm investing into myself. So when I use some of it to purchase my house, I was also investing in myself. You get what I'm saying? So all you're doing is it's a snowball effect where you're investing in yourself, and it's allowing you to keep some of the money that you already saved up and use it. I mean, I was able to pull out more than what I needed. That helped me create a cushion for myself, and I still, the plus side about it is I still have access to it. I did a loan where I paid, I think $60 every 2 weeks, and I pulled out maybe $23,000. How dope is that? To the point that I don't even think about that $60 that come out every 2 weeks. You know what I'm saying? So there's many of ways that you can look into purchasing your home. I think it's better to do it now, sooner than later. I mean, because like Mike said, you're paying somebody else's rent. When you look at how much money you pay, if you pay $1,500 a month, let's just say $1,500, and in 3 years, do you know in 3 years you paid $54,000? $54,000 for $1,500 a month for 3 years. You get what I'm saying? So I definitely think that it's well worth looking at, and I just wanted to share that. But I got your Cash App. I'm going to send you your lunch really soon. So do you guys have any questions? Drop some questions down. We want some questions. We want some more questions. Please, if you guys have any questions, just drop some questions. If you don't have no questions, I think we did really good on time. Despite that we didn't have our personal finance coach. She had a family emergency, but I'll make sure that I get her in this group and go live, guys. She has some amazing information that she will be able to share that I think that you guys will really, really, really appreciate. So Mike, real quick, what documents are required for to actually go through the loan process, just so individuals that are interested can start getting the documents together? They may have to go to their tax providers. They may have to, go a couple of places to see if, to obtain those documents.
Right. So for wage earners or salary employees, we would need your, as far as income, we need your W-2s, pay stubs. I didn't say tax returns, W-2s, pay stubs. So that's less documentation, assets we need, as you stated, checking savings. Yeah, I'm glad you mentioned the TSP, the thrift savings plan. That can be the IRA, money markets, mutual funds, anything that we call liquid assets, not just your traditional assets such as checking and savings, but such as the 401k, IRA, TSP, as you mentioned. Those are liquid assets that can be converted into cash. You can certainly use those as funds, as assets to help you for down payment and closing costs. The more assets you show the underwriters and lenders, we love to see that. You can have $1 million in the bank. Don't hide your money. You can have $1 million in the bank. You want to buy $100,000 house. We know that showing the $1 million you can buy. You don't even need to use us as a lender, but you still can use what I call OPM, other people's money, which is the bank. So if you want to, use that money, you have the option doing that. But show all your assets doesn't necessarily mean we're going to ask you for all that money. So it's the W-2s, pay stubs, checking, savings, 401k, TSP. Of course, we have to pull your credit. We need a copy of your driver's license, social security card, or passport. In terms of self-employed, that's a little different. We need tax returns, and or if you own any property, whether you're on the loan or not, or if you're on title, we need your tax returns, in addition to all the other documents I mentioned for the salary or wage earning employees. So we have what is called a document checklist. If you're interested, we'll send you that, and it'll stipulate exactly what we need in order to see if we can get you pre-approved.
Okay. So I just want to tap real quick. Okay. I want to tap real quick before we get off the line, just into some of the things that the documents that you talked about. So if you're self-employed and you're solely self-employed and you have to provide your tax returns as income, it's very, very important that you pay close attention to your write-offs, because I know that those are a lot of those are issues that arise for self-employed or business owners. They may write off, they can make $200,000 a year, but if you wrote off most of that $200,000 a year and show that you only make $45,000 that year, then sometimes that's what the lender is going to go by. I know some lenders have programs where they can look at your bank statements and different things like that can qualify you. But remember, the biggest thing is you want to put yourself in a position where you're getting the best interest rates. So you want to make sure that you just consult with a loan officer up front prior to that time, so they can let you know, hey, look, this was what I need you to do, X, Y, and Z, blah, blah, blah. They're going to tell you what to do. But go ahead, Mike. I see you wanted to tap in.
I do, and that's one of my areas, and I appreciate you mentioning that. Those are sometimes can be deal killers for self-employed. As you mentioned, you made $100,000. We see you made a lot of money, but then you do the write-offs, the depreciation, and the bottom line, you show you made $40,000, because we understand that. So in substitute of that, we have what is called the bank statement program, and how that works is we don't need your tax return. That's just another option. If your tax returns don't work to support the loan amount, then we got another option. You self-employed, let's look at your bank statements. Depending on your credit score, we may need anywhere between 12 to 24 months of bank statements. And we'll look at your average deposits. We don't care what's going out. We only look at what's coming in. So, for instance, if your deposits are an average of $10,000 a month times 12, that's $120,000 a year. We'll look at that as your income in order to get you qualified, and we don't have to worry about the tax returns. So, just keep in mind, that's an alternative. We call it alternative financing, or in the mortgage world, is known as non-QM loans. We can certainly entertain that. That still gets you in a position. Your rate may be a little higher as far as what rate it is. I can't tell you unless we look at the credit score, but that's an alternative that we can explore.
Okay, that's great. Somebody asked the question, should we start with Mike first to see where we are at? I definitely think that getting pre-approved or even speaking to a lender starts the process. However, if you want us to, if you want me, you and I to have a conversation to just go over exactly where you are, as in terms of how soon you're looking to move and different things like that, I definitely want you to fill out the buyer qualification assessment, and it just give me an idea exactly of where you are and all of that, and then I can help you the best way possible. However, I honestly do believe that the first step is to get pre-approved or at least to know where you are. And then if you need some credit help, then that's when Mike can say, hey, this, I see that this is going on. You might need some help in this area. From what I see, you might need to talk to Kiana, or he might say, okay, all I need you to do is get this one secure credit card, and that's going to take your credit score to another level. So he had the ability to be able to see where you are and the different things that you need to do to get to where you need to be. So that is, in my opinion, honest opinion, the first step is pre-approval. Any other questions before we end the night? We did amazing on time. Do Kiana or Mike, do y'all have any last words or anything that you want to share? Oh, I just want to add another thing about the tax returns. Even with the individuals who are salaried employees. I know I've had some clients that ask me, hey, they're concerned because they feel like they might have to provide their tax returns. Like, my aunt so-and-so did my taxes last year, and she wrote off a couple of things for me. I mean, am I going to have to show is that going to affect my debt income rate? Is that going to affect? No, if you are a salaried employee, you do not need your tax returns. You just need your W-2s. What the W-2s is the sheet that shows exactly how much money that you brought in for that year. It confirms your salary. So all of the things that you guys will talk about when you're talking to a lender and or filling out your application, I make X, Y, and Z a month, I do this, I do that. All of those documents just confirm everything that you have on your application. And like Mike said, that's the difference between pre-approval and being pre-qualified. People are thanking us for thanking us. So if you guys want to just share some thoughts or share some encouraging words or share some final notes to everyone, now is the time to do that.
Well, I just want to thank everyone for coming on here tonight and taking this time out just to get the information, this free information that we share with you tonight. And just like we have all said, don't be scared to go out here and make this large purchase. It is a large purchase. However, it's an investment, and you're going to leave it to your family, your children's children, and things like that. You don't want to continue to pay someone else's mortgage or pay someone else's vacation, because you're doing one or the other. You're paying the mortgage or you're paying for them to go on vacation. So you definitely don't want to continue to do that. And you'll be able to leave something to your children or your children's children when it's time for you to leave this earth. Just if anyone needs any information about if you pulled your credit and you see some things on there that you want to work on, definitely feel free to reach out to me. Don't wait until you need to move like next month and say, oh, I need your help. It's not something that I can do. I can't do magic. I don't do magic tricks. So with your credit. So it's definitely something that you want to pay attention to early when it's time for you to move, if your lease is about to end and things like that. And you're just like, man, I don't want to rent again. I don't want to renew my lease. Do not wait until 60 days and be like, okay, let me pull my credit now. No, don't do that. You want to do it early so you'll be in position to make those moves before your lease ends if you're renting. So that's it.
Thank you, Kiana. Mike, you have any last encouraging words or?
Yeah, I just want to thank everyone for the opportunity. This is a big step for you all just to, engage in this platform. I know it's difficult, with the challenges we're facing with COVID-19, but we're still moving strong. I mean, the purchase business is still here. I will say, those who own homes, we factor on not just purchase, refi, we do reverse, we do commercial. We are direct lenders, so we're a mortgage banker, so we can help you in multitude of ways. So just make sure that you are ready and able, and if you have any questions, that's what we
Oh
are
my
here
God.
for. That's what we're here for, to address any questions, concerns that you have, whether you are today's home buyer or future home buyer. You never know unless you put yourself in a position. You got some great professionals right here on this platform. I tell you, do your due diligence as well. You can talk to different realtors or credit advisors and loan officers. Just make sure, you check, and I would love to help and work with everyone. Maybe I'm not the fit for you. I'm very transparent and honest. And if you're not looking for that, but maybe I'm not your person, but I'm going to keep it real and just let you know exactly what you need to do in order to get that home ownership. It's an investment of a lifetime, and we want to make sure that we put you in the best position.
Okay, so my last words is I just want you guys to know that one, I want everyone to continue to be safe out here during this COVID-19 and the pandemic that we're experiencing. This is something that none of us ever thought that we'll go through in our day and age. I think that the way life is going now is going to be our new norm for a while. So I just wanted to make sure that everyone is just staying safe, and we really appreciate you coming. I also wanted to let you guys know that myself as a real estate agent is taking all of precautions to make sure my clients are staying safe. As a real estate agent, I am considered still an essential person that has to still close deals and make sure I show up for my clients, because some of them are already in contract and different things that's going on. So I just want you guys to know that I take all safety precautions when I'm dealing with my clients. I encourage all of my clients to make sure everyone have on masks. I provide gloves. I come with Lysol, different things like that. I'll give you your personal space to be able to go into the property and just view the property on your own, because this is really a scary time. And although things are starting to lift up, it is still scary. I mean, we're hearing different stories now. We're hearing different things that's coming up in kids. I mean, every time you turn around, we're hearing something new. So make sure that you take this time to just stay safe. Stay entertained at the same time. Do some virtual things with your friends, enjoy your family. So I just wanted to leave with those kind words. And also, again, like I said, thank all of you guys for coming. um 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 I just hope you guys enjoyed it. For those who are watching a replay, if you have any questions, still drop them in the box, because we're going to be here. Kiana is a part of the group. Mike will be a part of the group. We could pop in from time to time and go live in the group and talk to you guys, answer questions. We're here. This group is just created for us to become one and hold each other accountable for what our goals are. Home ownership is a part of generational wealth. It's very important that you start to create some things that you can leave legacies for your family. I can't stress enough how much we need to do these things. We need to purchase homes. We need to make sure we have adequate life insurance. We need to make sure, and I know I'm getting into a whole different pitch, but that is my passion. Like, just making sure that everyone understand their options and what's out there and what's available for you. So again, like I said, thank you so much for coming. All of our contact information will be in the group. All of our contact information will be in the feed. We have a spreadsheet, a roadmap spreadsheet that was uploaded in the files. I'm also going to upload a buyer's guide in the file, and some other documents, some letting you guys know about different programs, or just letting you guys know about home ownership in general. I plan to be very, very, very active in the group. So don't leave the group after tonight, because I definitely think that this is going to be a platform that's going to be able to help you guys achieve home ownership. Thank you again, and But you know what? Before
Take care, everyone.
I gotta give a special shout out to my virtual event planner that's behind the scenes. Come on and pop in. Come on and pop in, Melissa, and tell us who you are.
Hey.
No, everybody behind the scenes, hooking us up with with everything, with the questions. Melissa, I appreciate you so much. This is your opportunity to tell everybody who you are, the services that you offer, and how they can contact you.
Sure.
Yes,
So,
great job.
thank you. Thank you. So, of course, with COVID-19, you have to pivot, right? And so, all the events, all of our fabulous events that we planned for 2020 is basically canceled. And so, with rescue event planning, we decided to pivot and do virtual events and help people like Ida, to help her still be able to brand herself with her business as a real estate agent, but also still reach you guys in a different way. And so we help business owners, small business owners, entrepreneurs, influencers, who need to still be able to reach the masses through a different platform. And so it's already crazy with all the different technology, how to do this, how to stream. And so we solved that problem for you. As I was able to just focus on herself and focus on her guests, we're able to do that. So I will drop that link in the feed if you're willing to talk to us and you're needing that type of services. But yep, behind the scenes.
Yeah,
Great job.
hey, Melissa, I truly wouldn't have been able to do this without you. Melissa gave me the time to focus on the event and prepare. She sent the evite. She did the event bright, set up I mean, everything, anything that you can think of. She did it. So if you own a business and you still want to be able to reach your clients or reach continue to reach some clientele, and you have no clue with this technology stuff, reach out to her, guys, because she's amazing. So we were a big team today. Thank you guys for also pitching in when I was having technical difficulties. Kiana, you was amazing. Mike, you was amazing. Melissa, you was amazing. I appreciate you guys. India, we miss you so much. I know that you're going to come on and watch the replay. We miss you here today, but I know that you're going to at some point be able to come in and go live with the audience that's in the group. And thank you guys that's watching from YouTube as well. We have multiple platforms going on, guys. I don't want to just give Facebook some shout outs. And on YouTube, if you guys ask any questions, I'll make sure that your questions get answered.
Thank you,
Great
Ida.
job.
All right. Thank you, guys.
All right. Thank you. You all have a good night. Be safe.
All right.